to Trading Mastery Institute. Whatever that is being shared is of our opinion and is not an advice for you to enter the market. Okay guys, I have some question from the members that how to use the central bank interest rate apply on our trading. Okay, so the central bank interest rate is for us to know the long-term direction or maybe quarterly direction of where the potential currency pair will heading. Okay, so as you can see over here, we are looking at the central bank interest rate. For example, the US over here interest rate is about 5.5%. So we want to pair it with a low interest rate. So over here we have the low is Japan currently at 0%. Switzerland is at 1.75 basis point. So we want to pair this currency. So meaning US is stronger than yen and Switzerland dollar. So what we do is we go to the chart and we take a look. So the first one we pair it with a Japanese yen. Okay, with the Japanese yen on the daily chart that we see. Okay, so I will try to find the beginning of this here. So somewhere here. Okay, alright. Okay, it's here. So beginning of this year. So this is US against the Japanese yen, meaning $1 of US is getting 140 yen and so on. So as we can see is that $1 is getting more. Okay, that's why the price is heading up north or appreciating. Okay, so by the interest rate data, we can actually know that from the very beginning of this year that there is a potential that the price will head up north. So if you guys were to use this data and combine with your technical analysis, okay, you can look for a long aggressive entry over here. Is about nearly 1000 pip around there. Okay, so now there is a lot of central bank is reviewing their interest rate. So we want to have the latest interest rate on the next quarter of the year and try to predict where are the potential direction for the currency pair. This is just a basic that I will teach you. I will not go into detail on the microeconomics and market sentiment. Okay, sometimes it doesn't correlate. Okay, due to certain economic factor, I will cover on the future lesson. But for now, basic what you do is when you see a stronger interest rate, you want to pair it with a low interest rate. So the price will head up. $1 is getting more. So the next one is the Switzerland. Okay, Switzerland dollar. So we open the chart. What do we see? Okay, at the beginning of the year, you can see that $1 is getting more. Okay, more from around 83 cent Swiss franc to now about 88 Swiss franc. Okay, so you can see from the chart that the price is heading up. So it's about 400 pips. So if you were to use this data combined with your technical analysis, you can make good or handsome profit. Okay, the next one I want to show you, if we were to see over here, US dollar, if we were to pair with the Eurozone interest rate or the ECB. Okay, so US is about 5.5 basis point, Eurozone is about 4.5. Okay, so meaning there's not much difference. Okay, it's about 1 basis point difference. So let's see how does the chart look like. Okay, so this is Euro USD on the daily chart. Okay, so this is the beginning of the year 2024. As you can see that the market, how does the market behave? Because of the disparity between the interest rate is not that much. So as you can see, the market is like a sideways. Okay, it's forming like consolidation from here roughly. Okay, let me just change the color. Rectangle property. Okay, as you see, it's like a range bound. So you can expect a range bound market and you can apply your range bound strategy. Okay, but most of us we are using the Novak flow, so we are looking for a trending market. So this is another tip for you guys. Okay, so the next one we are looking for the to compare the US and the Australian dollar. So there is not much different as well in the interest rate. So let's see how does it behave. Okay, so from here we can see from the beginning of 2024 what is the price range. So the price range is still about, we can see here is going down south, but it is on a so-called range bound as well. Okay, range bound after the beginning of the year. Actually there is a consolidation, so the price is moving in a consolidation formation, so you can trade accordingly. Okay, and then the next one, if you were to see over here, US and the pound or the cable. Okay, how does the currency pair behave? Okay, from the very beginning we can see that there is like kind of a range bound kind of market. So usually we do not want to trade in this kind of market. So the next one we can also see between US dollar and Canadian dollar is only about 0.5 basis point different. So I think by now you all should be an expert already. You should see a range bound market. Okay, let me just open up. Okay, you can see over here is from here to here. Okay, or we can just move it out. Okay, so for the Canadian and US dollar, we can see that it's about a ranging market, even though we can see that it's going up, heading up, but it is on a range bound. Okay, that's not if you can see over here, this is a trending market, so the interest rate does help us as a trader. Okay, the last one is the New Zealand dollar. Let me just see over here. Okay, same here. New Zealand dollar and US dollar are having the same interest rate, so you can see from the beginning of the year, okay, is on the range bound. So usually try to avoid this kind, and keep a lookout on our Telegram group, whereby we will try to post this central bank interest rate on a quarterly basis, so that you as our traders or members can benefit from this information or knowledge. Okay, once again, thank you for your support, and see you guys soon. Bye bye.